Good morning, Trading Cat here, doing a daily market insights. Unfortunately, I don't have a whole lot exciting to talk about today, other than a quick overview of markets. Maybe talk a little bit about Nvidia and some of the recent price action in the S&P 500 and how that differs from other indices. So let's jump straight into it. So looking at the S&P 500, you'll see Nvidia is a large component of the S&P 500 and also the Nasdaq, and you can see these are both ripped up higher recently. Well, that was last night because Nvidia came in as a beat, and you can see if we look at Nvidia itself, massive beat, screaming up into the stratosphere. That company just seems to beat every single earnings report. So what I find interesting is that the Nasdaq and the S&P 500 have been taken higher by Nvidia, and you can see that here. However, the other US indices actually look like they're rolling over there. Now, this might just be a little bit of consolidation before they continue to join the party and move higher, or it may be the S&P 500 and the Nasdaq roll over to join them lower. I mean, looking at this, I would still say this is in an uptrend despite this pullback here. So, to me, that looks like an uptrend, especially in the broader context there. And, similarly for the Dow, again, I'd still say this was an uptrend. Trends don't normally turn on a dime like this. Normally you're likely, even if this was starting a new downtrend, to sort of bounce back up to here before heading lower. So, I'm finding this interesting at the moment because it really looks like the Russell and the Dow, are ready for a little bit of a push higher. Whereas, the Nasdaq really looks a bit overdone. I mean, it's still in an uptrend, a strong uptrend, but it is towards the upper end of that. Also, to complicate matters further, the VIX is very, very low, like 11.6 for the VIX when we've got, 5% interest rates and, basically we're already started World War III. We're just not into the sort of, we're just warming up for it. So, to me, this seems like volatility is too low. So, I wouldn't be surprised if maybe today we get a bit of a sell-off in tech, rotating back into the names that are sort of small caps and your sort of bigger companies, bigger blue chips, industrials, etc. So I wouldn't be surprised to see a bit of divergence between the SPY and the Nasdaq, as they may go lower at the same time the Dow and Russell move higher, as the market sort of digests the perfect news of Nvidia and sort of says, well, the future looks perfect. Who's left to buy? If right now the future for tech and AI and everything looks perfect, um, I suspect everybody's already long, which again suggests to me that, we might actually be in a little bit of a topping process here. However, I'm in a funny place with this market because I don't really want to commit to something and go against this trend either. So, I'm looking at it. What's the summary? The VIX to me feels too low, which would fuel a sell-off. Nasdaq and S&P 500 just look a little bit overdone, and the Dow and the Russell seem a bit underdone at the moment. However, who knows what? I don't have a clear read on equity markets today. One thing I would like to talk about is the S&P 500 before the Nvidia report kind of was in this reasonably narrow trading range. And in terms of price action, if you were a bear looking to get short in this, it's interesting if you sort of said, "Oh, okay, well, we're in this range. We're here. I'm going to wait till I've got confirmation that we're breaking lower." You would have sold, probably there as it broke out lower, or you'd say, "Oh, okay, it's ripped higher. I'm going to sell once it breaks support again," which would have been there. Then you would have said, "Oh, right, it's really going lower now. I'm going to sell there," right? And then you would have got your face ripped off. Similarly, if you were looking to go short here and you said, yeah, this is overdone, you would have waited till it broke down again and you would have sold there. And then you would have waited till it moved past to take out the prior 1 hour bars low, which would have been there, and so on. And then, you would have waited for the next break of support and gone short there. Now, stepping back from this, the interesting thing is If you had have actually, instead of trying to sell here, you had bought at each of these times, look at the risk reward on that. With all of these, there's at least 2 to 3 times risk reward just by buying what looks like a good short entry on breaking support. What's important with this is that it's got room to move to the upside. So all of these examples here of these pink dots actually show that there's, it's not, the market's not at all-time highs. So, if you bought these, there is room to move higher. And, the final thing to look at the price action here is, if we were looking to get long here on a break of resistance, we would have bought that. We would have bought that. And then we would have said, oh, okay, well, we've got a new level of support resistance in here. I'll buy when it breaks out against that. So again, you would have been, you would have probably bought there. And then, to add insult to injury, you'd have said, oh, we've got a new level of resistance again. Actually, that's lower than that. And once you get up to that again, you probably would have bought. And again, you would have got your face ripped off. Similarly, if you were stepping back to a bigger time frame and waiting for the market to roll over, you would have looked at this and said, oh, look at this. It's all going down, going down. But of course, what happened is those people who went short here were probably looking to make this line here for they probably would have covered their shorts at this line here, but it never got there. So in this range here, there's still a whole heap of people who are short who sold short into there. And of course, what happened then is because you had a whole heap of emotional money short in here, it gave the fuel to rip higher to actually eventually break out convincingly through this level of resistance here. And, as long as we hold above this level of resistance, we're still in an uptrend. It's kind of weird when VIX is so low. That's why don't have a high degree of confidence. But I guess the important thing here is, going through this procedure of just trying to, if you were trying to buy breakouts of resistance and sell breakouts of support, you would have lost money very quickly. If you reversed all of those trades and did the exact opposite, you would have absolutely milked it. I mean, even if we had have been, let's add another dot there. So, if we had have been going here and we've got, right, it's tried to break out higher and now it's failed, because it's broken this line of support here, and then you get face ripped off the other way. So, I think this is a reasonably interesting way to trade. And, so basically what you're doing is you're just fading breakouts of resistance and support. And instead of trying to buy the open white space, you fade it to try and bet that it's going to fail that breakout and reverse back course. So that's probably enough talking about US equity markets at the moment. The UK has an election coming up on 4th of July. This caused a little bit of trouble for the equity markets, but not too much. The pound also strengthened a little bit on that news as well. Look at currencies here. Again, this is an example of if you had have waited patiently as a bear to try and sell a break of support there, you would have got your face ripped off. So, again, in terms of this, I don't know where this market's going to go. It's in an uptrend, but if the price sort of moves up and starts moving through here, it's likely to run up and meet this sort of this sort of price target here before people start to bail on it. And you can see even this has happened here, because if you had have been looking to get long this and you had have bought, been waiting for a breakout to buy, you would have bought there, which would have been a terrible place to buy. You would have turned around and had your face ripped off. So I would be surprised if we actually get some price action that's a little bit more like, let me just like, say, for example, bears have got in short here. And if this reverses up, having hung around this, it's probably going to go up to this line here. Of course, we can get a better read on that by looking at this, which would suggest this, the euro would run up to here, etc. So sorry if this is a bit of a rambly post today. Yields have, as suggested earlier, they're in this pattern here where I suspect they'll probably break higher, but there's no guarantee of that. I think there's macro reasons why the yield should be higher, but ultimately the price will tells you a lot more than trying to second guess macro. Precious metals had a really bad day yesterday. You can see here that they broke through this support and didn't even look back. So, it wasn't like, oh, I'll stick my head through and then rip higher. It was, I'm going through, wow, I'm just going to dump now. One of the interesting reasons for that is when we look at the client positioning for gold here, you can see here that whenever you have a sell-off, it's normally starts from, a low extreme here. So these tend to correspond to good times to be sellers. If you had have sold whenever this thing looked low, you would have made a good short entry. Not always, but in general, you can see, waiting for this to get to there actually picks you pretty good places to sell. And whenever you get to this sort of area, that, that, you're generally finding very good places to buy. Now, to me, one thing I find particularly interesting about this is that normally when the market's in a downtrend, this SSI, this client positioning, tends to go higher, and then for a little while the price keeps going lower at the same time this goes lower, and that's normally your setup. So if you look at this, it's a little bit difficult to see, but where we actually reach the extreme here, the price kept going longer while this ran lower. So similarly here again, we got to here, and then the price kept moving lower as this started to sell off. So what you're really looking for is an extreme in this, and then the price to keep moving lower at the same time this starts to fall. And that's normally your long setup. And we're not there yet. Looking at this, it's still in an uptrend to me, but, somewhere around here would be a sensible place for it to bounce. And it may run back here and then go like that, or it may just bounce from here. But I think there's probably, maybe half a day's further sell-off to go before that turns around. Yeah, anyhow, so that's precious metals. Again, apologies if this has been a little bit rambly today, but I don't have a particularly good read on the market. And the thing about trading is if you don't have a good read on the market, sit on your hands. It's quite normal for traders not to be able to look. It's quite normal for traders to be able to look at a chart and not see opportunities sometimes. And that's the time when you should sit on your hands. There's no reason why you need to have strong opinion all the time. And right now, I don't have a particularly strong opinion other than maybe watching gold for confirmation that we've turned because because of this particular indicator here where we would want where we're basically looking for a sell-off in price, which is up here. At the same time, this makes a high and then this reverses while price is still going down, and then that's normally a good time to turn. So we're not there yet. I'd like to see this move down to about here at the same time price continue to move lower, and that would be my buy entry. In turn, yeah, so that's where we're at today.